Right, so we're going to talk about process costing and kind of differentiate it from what we talked about in the previous chapter with job order costing. Well, first of all, just to make sure we're kind of clear about the distinction, the differences here, job order costing involves unique, identifiable items, something which I can easily distinguish from something else. That is, for example, this house that a contractor manufactured is certainly different than another house that he or she might have manufactured. This airplane is different than an airplane because it has a different identification number. So they're separate, distinct, and therefore, really, in many ways, the item that I'm producing becomes a cost object. Well, on the other extreme, with process costing, what we're doing is producing mass amounts of items. Mass amounts of wheat is being processed into flour. Mass amounts of crude oil is being processed into gasoline. And the items that I'm producing, that is the pounds of flour, the gallons of gasoline, those units are indistinguishable from one another. Sometimes they're called fungible goods. That is, they can be interchanged from one another. So if what I'm producing is really not distinguishable, then the item itself really cannot become the cost object. The house, the car, the airplane that I'm producing can become its own cost object. Well, if I'm producing gasoline, there's nothing to distinguish one unit of output from another. So the cost object is going to have to be moved upwards a little bit within the corporate chain. And so what we do with process costing is say, okay, look, in our refinery, if I'm processing crude oil into gasoline, what I'm going to do is to take that refinery, I'll make that my accounting entity, and I will measure the amount of costs that go into that, okay? The refinery becomes my cost object. So I'm going to define an accounting entity as my cost object. And likewise, I will define a very definite time period in which I am going to measure these costs. So again, what I'm doing is to make sure that I'm identifying the item, the unit, if you will, within the organization that's going to, in which the costs flow in. And then I will divide it essentially by the number of units that I produce. So it becomes sort of an average cost. That is, I can measure the amount of materials, the amount of labor, the amount of overhead that went into the oil refinery, and then I can divide that by the number of barrels or gallons that I produced. And to a certain extent, that's basically the essence of job order costing. It's kind of a practical approach to something that is trying to measure the cost of something where the items are indistinguishable. Now, an important, let me scooch back up here a little bit. Okay. An important element of job order costing is this right here, and that is every item that I produce under process costing is going to contain the same amount of materials, the same amount of labor, the same amount of overhead. Now, with unique production, with job order costing, that's certainly not the case. Some items will have more materials, some will have more labor, some overhead, but with process costing, one of the basic assumptions is there is an equal amount of materials, labor, and overhead in every item that I produce. Okay, a couple of basic assumptions that we're going to make when we do process costing. One is that we're going to distinguish material cost from conversion costs. Now remember, back from the beginning chapter, conversion costs are the sum of my direct labor and my manufacturing overhead. The idea here is kind of more pragmatic, and that is materials are generally added at the beginning of the process. So if I'm going to process crude oil into gasoline, I have to add the crude oil first. Then, whatever takes place in terms of the converting it to a finished good, namely gasoline, I'm going to add the direct labor, I will add the manufacturing overhead over that production. Now, sometimes the production can be almost instantaneous. Sometimes it may take a little bit longer. But the assumption is materials are added first, then you add labor and overhead to convert it to a finished product. So we're going to distinguish between material cost versus the conversion. Now we're going to look at a couple of assumptions here. And the complication with process costing is what happens when the beginning and ending inventories of finished goods are different. and that adds a little bit of complication. It also creates the opportunity, if you will, for having a couple of different ways that we can measure material cost, a couple of different ways that we can measure conversion cost. So we'll look at a couple of different ways that we can do that. All right, so we're going to look at a simple example here where there is no beginning and ending inventory. Now, the 5 steps here, you don't necessarily have to memorize them, but these are the steps we're going to go through to do process costing. Now, another important concept with respect to process costing is the calculation of equivalent units. Now, I don't want to overstate or make too complicated what equivalent units are. Generally speaking, equivalent units come into play more with conversion cost. So, for example, if it takes me 2 hours to make 1 unit, okay, to process 1 unit, well, okay, if I only had 1 hour, then technically I could have, you give me 2 hours, I could have 1 unit half done and other units half done. So that's kind of the essence of what we're doing. But again, I think you'll begin to understand what equivalent units are when you see the practical application of it. Okay, so the way that you go about doing process costing is fairly straightforward. The complication is, what do we do with beginning inventory cost? What do we do with ending inventory cost? Now, the first step, which people tend to ignore, but which is important, is I need to account for all the units. So in this case, we have 0 beginning inventory. We start at 400, so the B plus A, I have 400 units, the beginning plus my additions, equals my ending plus my deductions. My deductions here, they transferred out 175 units, and they have ending work in process, 225. So I can look at these and say, okay, yeah, I can account for all the units of inventory. Now, step number 2, equivalent units. Well, if they're finished and they've transferred over to finished goods, I cannot add any more materials. I cannot add any more conversion cost, okay? They're done. So the equivalent unit would be 1 for each one, 175 and 175. Now again, I want to keep them in separate columns because I want to take these equivalent units and divide them into the cost. And I'm going to come up with a different equivalent unit cost for each of these. Now, ending inventory is sitting there with 225 things in it. And because I'm adding materials at the beginning, it's done with respect to materials. But in this case, they tell me that the estimation is ending inventory is only maybe 60% done. So if I take the 225 times the 60%, that gives me the equivalent units of 135. So I add these up, I get 403.10. Yes, it's not unusual to find that you will have different equivalent units, and that's perfectly normal. In fact, it would be unusual to see that I would have the same equivalent units. Now, step number 3 is pretty straightforward. I just sum up the cost. In this case, I have no beginning inventory cost, so it's just what it was added. 50,600, of which 32,000 materials, 18,600 is conversion. Later on, this becomes a kind of a check figure that I can come back to. Now, step number 4 is the application part of it. And that is I need to find what is my equivalent unit cost, that I can take these and then apply them to my inventory accounts. Okay, so I take my equivalent unit, my cost, pull those down here, and divide them by the equivalent units that I calculated in step number 2. So again, it's sort of an averaging, but it's a little bit more complicated because we're assuming things are being added at different times. And so my equivalent unit cost for materials would be 80. My equivalent unit cost would be for 60. Now again, I'm going to keep these segregated. There's kind of a temptation to add them together, but for our reasons, we're going to come back and keep them segregated. So now, step number 5 is really the whole point of doing this. This is kind of a worksheet approach. I need to value my inventory. I need to value what went out of work in process into finished goods and what's left there, okay? And then obviously whatever goes into finished goods will eventually become cost of goods sold. So if 175 units were transferred over to finished goods, then take 175 times those equivalent unit cost. So it's just basically taking the equivalent units that I calculated in step number 2 and then multiply them times the equivalent unit cost. Okay, I have 225 things sitting in ending inventory times 80. Okay, I can account for all 32,000. They add up, they match. Do the same thing with respect to conversion costs. That I could, of those total 18,600, a certain amount of that, the 175 times 60, got transferred to finished goods. The 135 times 60 is still sitting there in ending inventory. And that's essentially my answer. Okay, that is, I'm going to debit finished goods for 24,500 and credit work in process for 24,500. If I made all the correct debit entries as the materials, labor, and overhead have come into work in process, this amount should agree with my ending balance in my work in process account. Again, kind of a simple debit and credit approach here. Again, the materials, the various accounts are flowing in here, all of my cost into my work in process. Likewise, from my worksheet, and basically what we do here is a worksheet approach to determine the amount that gets transferred over. Again, I make the credit to work in process, the debit to work in process, the debit to, okay, in this case, we're actually transferring to another department, but I could also call this finished goods if I wanted to, it doesn't matter. So I would debit the next account, finished goods, or department B, if you will, excuse me, and credit the work in process in the department I just finished. All right, well, the first actual technique we're going to look at, which particularly because we're going to have some different beginning and ending inventories, is what's called the weighted average. Now, weighted average basically says, look, okay, I'm not going to segregate out beginning inventory or inventory costs from that which was added in this time period. I'm going to take the two, sum them up, and average it over the amount that I produced and transferred over and the amount that's in ending inventory. And the idea behind a weighted average is, well, if your costs really don't change, I can sort of re-average every month. There really shouldn't be any major differences in the total cost. So I think the best way of looking at this is to look at an example. So again, the number is going to be different here than we did in the previous example. Okay, I want to go through my B plus A equals E plus D formula. That is the beginning of any account plus the additions to it equals the ending balance plus any deductions from it. And make sure in this case I can account for the 500 units. So here's my beginning inventory, what I started, what got transferred out, in this case to finished goods, let's assume, and the 100 units are still in ending inventory. So weighted average would say, look, okay, when we go to step number 2, let's just take what was produced and transferred plus what's in ending inventory, the actual work that we're doing, okay? And so my equivalent units would be the 400 and 400 if they're transferred out. And I have 50% completion. So with respect to materials, since it's being added at the beginning, I have 100% or 100 equivalent units in and ending inventory and 50 for conversion. Now again, this is the case where we're going to have 2 layers of costs, that is both for beginning and plus what got added. So step number 3 is pretty straightforward. Just add them up, okay? Now, under weighted average, I pull down the total cost and divide them by those equivalent units, okay? And so step number 4 is the preparation for doing really the whole point of doing this worksheet. I need, as they say, they designate this to assign the cost. I want to assign the cost to what went into finished goods that transferred out of cost of goods or work in process, that is my cost of goods manufactured. Again, you can kind of think of this right here as my cost of goods manufactured. This is my ending inventory and work in process. Okay, what I come up with here should agree with my ledger account if I did everything properly. So again, just like we did before, once I have the equivalent unit cost, I take them times the amount that were completed and transferred out, 400 times 75.6, 400 times 54.4. Do the same thing with the ending inventory, times the respective equivalent units. Again, the equivalent units are going to be slightly different here because the items are only 40%, or excuse me, 50% done. And again, if I add these up, okay, I will come up with the same amount of this total up here. Again, this is kind of my built-in check that I did everything right. Do these numbers agree? Okay, that is my total cost that I'm dealing with here should agree with the amount that I've applied to the debit and credit entry between work in process and finished goods and the amount that should still be in my work in process. I don't really have to do anything with this 10,280. I've already made a series of debit entries to work in process for that. But the 10,280 should agree again with my ending balance in my ledger account. If not, I'm going to have to do some reconciling work with that. Again, this is work in process. This is the weighted average method. It simply says, okay, look, take all of the cost. Don't make any segregation between beginning and what was added, and divide it by all the work that was, that the assumption is if it was here, okay, we did it, okay, and then come up with this equivalent unit cost. Now, FIFO is another way that you can do it. And the difficulty with FIFO is that you're creating layers of cost, layers of inventory. And so you still want to go through the same B plus A equals E plus D formula. But what I want to do here is to segregate out and say, look, okay, I began with 225 units, okay? And I know that of that 225, okay, now, of that 225, because materials are added at the beginning, I don't add any more materials. And because it was 60% done at the end of last period, I had to add the additional 40% of work. So what I'm doing here really with FIFO is measuring the amount of work done only during this time period. Likewise, I want to take that 225, okay, that's going to go over. And remember, the sum of these, okay, is equal to the 400. 400 units went over. So the assumption is what goes over first is what's in beginning inventory. Started and completed would get me to, to the 400. Okay, and then I still have the 100 units in ending inventory. Again, these are going to be, if they're transferred over, I did it during this time period, so the equivalent units are going to be 100%. So 175 and 175. Ending inventory will always be the same whether I'm doing it via weighted average or FIFO. Okay, step number 3, same. Okay, I just want to sum up my cost here. Now, where it gets different now is in step 4 and step 5. Step number 4 says, look, okay, pull down only the costs that were added during this time period. Okay, and that is my equivalent unit cost here is only going to be for the work done during this time period. Now, of that beginning inventory, okay, now I can pull down my beginning inventory cost. So what I want to do is with step number 5, I'm going to do this in layers. I have what I started with, the 225 were sitting there in beginning inventory that had a certain amount of material cost and conversion cost. Then, what did I need to add to that to finish beginning inventory? So no more materials were needed, but we had to add the other 40%. So I have the 4680. So that gives me a total of beginning inventory of 30,780. Then take this 175 units that got transferred, started and completed, times their equivalent unit cost. So the 52,480, excuse me, represents the amount that I would debit to finished goods and credit to work in process. Likewise, too, according to my worksheet, if I look at my ledger account, if everything was done properly, that should be the ending balance in work in process. Okay, we're going to look at one more application of FIFO, and that's where, let's say you're going from Department A to Department B to, let's say, finished goods, okay? And so we're looking at it from the perspective of Department B here. That is, things are flowing from Department A into Department B. How do I use process costing in this particular case? And we're only going to look at it from the point of view of weighted average. We're not going to look at it from the point of view of FIFO. I think if you can understand weighted average, if you had to teach yourself FIFO, you could do that. Now again, just like I did before, I always want to make sure that I can account for the physical units. There's a beginning balance. This is what got transferred in during this time period. Okay, there's what got transferred out, and there's what's left in ending inventory. Okay, So that B plus A equals E plus D formula is really important. Now, what I'm going to do here, basically, it doesn't matter how many departments this came from. Okay, they're going to come in with their accumulated cost, and it's not important for me to distinguish that. Okay, but under weighted average, I want to look at, okay, of this, I've accounted for the 640. 440 of that got transferred over to finished goods, let's say. All right. Well, if they got transferred over, they're done in terms of equivalent units. Now, where it gets a little bit tricky is with the conversion cost. Okay. In this particular case, because these items got transferred in, the 200 units are sitting there. They can't add any more transferred work. Okay, they're done. Okay, so these are always going to be 100% from the transferred in department. But where it gets a little tricky is this one right here. And basically it says, I don't add the materials until the end of the process when it's really done. So if anything is in an ending inventory, by definition, it's not done. But in this case, I got 200 units sitting there. They're 80% done. So my conversion, or I would take the 200 times 0.8, or I'd have 160 equivalent units. So the thing that's a little bit difficult here is that these costs are only added when I get to a certain point. Now, once I have that, then basically everything is the same. So the really complicated part of doing this is this step right here, determining the equivalent units. Again, I just want to step with the E plus D formula. What got deducted, what got transferred out, they go over at 100%, the total equivalent units. Then I have to differentiate between, with transferred in cost, nothing else can be added there. Materials, okay, only add at the end, and I have the conversion cost because it's 80% done. Okay, well, here are all of my costs that I added during the time period. Okay, what I began the period with, I got still there and transferred, I haven't finished. What the cost of what got transferred in, the materials added, the conversion cost, bring these sums down, all these, and divide them by the equivalent units. And then go back and say, okay, fine. Now what I want to do is I want to assign a cost to, to finished goods. So I can debit finished goods and credit work in process and prove, if you will, my ending inventory. So just taking the 440, 440 times these respective equivalent unit cost. So I would make a debit to finished goods for 120,890 and a credit to work in process. Likewise, with the ending inventory, I'm not required to make any kind of entry, but according to my worksheet, if I were to look at my ledger, that's the amount I should have. If not, I need to make a reconciling entry. All right, so that's kind of it in a nutshell with respect to process costing. So for our purposes, what you're going to need to know, how to do process costing with weighted average, FIFO, okay, with no transferred in cost. And with respect to transferred in cost, we're simply going to look at it with respect to weighted average. So take a look at it. I think looking at the examples in this case, visually looking at the examples is better than trying to do it conceptually. So take a look at that. And again, if you have any questions or anything, just let me know.